You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's like the market doesn't believe that this is for real, that we're in a dream. So I'm still more focused on discovery exploration because if gold stalls here at 2,000 to 2,100, the market will be inclined to say, oh, now it's stopped. Failing to appreciate that at $2,000 gold, the bar for what counts as a discovery intersection is a lot lower than it has been during the past decade of a bear market.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers. Today's show is brought to you by Osino Resources. Osino is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, and one of those mines, Osino's management previously developed and sold to B2 Gold. The company is cashed up, and Osino has a large drill program with steady news flow and catalyst for not only this year, but they're cashed up for the next couple years now. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. My guest today is analyst and newsletter writer John Kaiser of KaiserResearch.com. I'll put a link in the show notes to John's website. John covers the junior resource sector and publishes the Kaiser Bottom Fishing Report. So John, welcome to the show, and I've listened to interviews with you over the years, and one of my listeners actually requested that I bring you on the show. So thank you for your time. And one of the things that I've heard you say over the last few years is that you expect a discovery-led resource bull market. With the price of precious metals rising so much, it seems to me that it's a gold price-led precious bull market. What is your commentary and your expectation about it being a discovery-led resource bull market?
I base that on the observation that where the money has been going into juniors, it's been juniors that have existing systems, gold, silver systems, that aren't quite good enough to make it. They aren't even really optionality plays. But Bay Street, in at least the last 3 months, has really put money into these types of projects where it is the junior taking control of its destiny and making the project bigger and better through exploration, through geological ingenuity. The gold uptrend, I think, has really caught everybody by surprise. I've been predicting that gold would reprice into the $2,000 to $3,000 range for a couple of years now. It's happening faster than I expected. And we have kind of an interesting situation now where the optionality plays are coming to life in a big way. But the market really isn't taking this $2,000 plus gold seriously. In fact, even today, we're seeing a pause in the market, and there's a bunch of red on the screen. It's like the market doesn't believe that this is for real, that we're in a dream. So I'm still more focused on discovery exploration because if gold stalls here at 2,000 to 2,100, the market will be inclined to say, oh, now it's stopped. Failing to appreciate that at $2,000 gold, the bar for what counts as a discovery intersection is a lot lower than it has been during the past decade of a bear market. So right now I'm scouring for companies that have systems where money can go into the ground, where we can enjoy them, delivering results, showing that it's bigger and better. So I still think it's a discovery-led market, and there aren't that many optionality plays out there because they all got cleaned out during the last decade of a bear market.
So John, we saw decades ago Bre-X, albeit it was a scam, kind of lead the market and pull the whole market up. We saw Voisey's Bay with Robert Friedland pull the market. Do you see any plays out there doing that? Because I don't. From my vantage point, I saw people hope in Novo, which that hasn't lifted up the whole market, at least thus far. Do you see any companies out there that have the potential to do that right now?
Great Bear is the one that has surprised the market the most. It has close to $1 billion valuation. It doesn't have a resource estimate yet. It's all based on that 22-kilometer LP fault structure south of Red Lake, which emerged from their Dixie project, which is something a lot of holes have been drilled into, but didn't really amount to much. They did some innovative sleuthing as to where the hinge zone might be and came up with good stuff. But even that was not what really drove the market. It was realizing that here's a fertile structure that goes down. It's a crustal scale structure, and it's got these splays off it, and there's potential there. They're pulling wonderful holes all over the place, and the market doesn't really regard this yet as real. And you're right, there isn't the Voisey's Bay, the ECADI, the fake BREX, which was thought to be real at the time, that's driving this market, which is why it's interesting that money is going into these exploration plays. One of the ones that I'm watching that's on my favorites list is Zephyr Minerals, which is drilling a Broken Hill type target in Colorado. Now, beauty of this is if this were actually delivered a Cannington clone such as BHP found in 1990, that thing would have an equivalent of $100 value for the stock if you didn't have any further dilution. It's come up from 20 cents at the beginning of the year. It's bumping around 85, 90 cents. They've started drilling, and they probably will hit their first target within a week or so. If they actually delivered on something like that, and you see Cannington caliber grades, massive sulfide, zinc, lead, silver, this will be the kind of liftoff for the sector that will be reminiscent of what we observed in the late 90s, because here's a play where you can actually see all the geology, all the geochemistry, everything pointing to it, and the stock hasn't really super taken off because the market's sort of saying, well, we haven't had a big win in ages, but if you get one, the glass has switched from almost totally empty to half full. But that 90s market was a 90% full market. And something like Zephyr, if it were to deliver this type of elephant and you start getting into these double-digit number gains, that would really turn this market into a crazy discovery-oriented market with this big backdrop of gold and silver in the background. And in my view, we've also got an infrastructure renewal boom coming in several years to dig all the world's economies out of their hole, which is going to add the demand, the price gains for all the base metals and other metals that go into real things. So we've got this fantastic three-layered situation of discovery attracting investors, gold and silver creating the excitement that 2000 draws in completely new audiences. And then we have the potential for all the other metals to come in behind it. And we're already seeing the market anticipate that because the economy is terrible right now. And yet a lot of these base metal stocks are starting to attract attention.
Do you see a lot of the wins from the gold producers, gold royalty companies starting to be deployed into some of the smaller fish?
We're seeing cleanup type stuff. For example, we saw Oren, which is not really a gold producer, acquire East Main, which has an advanced deposit and is basically an orphaned company. So it's being acquired by Oren. And I think when you start plugging in $2,000 into these models, all the economic studies are based on about $1,300 as a base case price. There aren't that many companies for the majors to acquire. The one that's one of my favorites as a gold optionality play is Midas Gold Corp, which has that stibnite gold antimony project in Idaho that has taken forever to permit. But they finally look like they have light at the end of a tunnel with a possible mine approval in late 2021. This stock was as low as 26 cents during the March meltdown when everything got sold off. It nearly touched $2 this past week. And when you run the numbers from their pre-feasibility study at $2,000, you're looking at a stock that should be somewhere in the $5 to $10 range. And meanwhile, it's still it's gone up significantly from sort of 60 cents where it started the year. The market's still not recognizing the value that this higher gold price really implies for these companies. And there's tremendous leverage in these advanced projects. So I don't know when the majors will start making a move. Right now, they're enjoying the enormous explosion of cash flow that the higher gold price is doing for those who didn't forward sell their gold production.
It's a lot easier for the smaller juniors to get funded right now for exploration programs. When we see that, we see a lot of these projects coming off the shelf and being brought back and presented to the market. If you're looking at a company that's taking on a legacy project with known baggage, what are some of the red flags that you would look out for, and what would be some of the positive things that you would look for in order to have a catalyst and make you money?
Well, part of the rethink sort of psychology that I think's at work is people don't want to just wait for the metal price to drag this, 0.5 gram per ton deposit of a couple million ounces into the money. They want the company to use this awakening bull market to put more money into it to see if what there is all that there will ever be. A lot of money during that past cycle we had was involved projects that had been discovered ages ago, that they acquired into the juniors, that they spent brute force money on just infill drilling, upgrading it, and not doing an awful lot of geology to see if this is maybe the offset from something completely spectacular. I mean, a classic old example of that was the Oyu Tolgoi project that Robert Friedland acquired for Ivanhoe from BHP in Mongolia, and it had this copper deposit at surface, which really didn't quite work at the copper prices at the time. They eventually did when the China super cycle kicked in. But Friedland put his people to work looking at the deeper potential, and they came up with the Hugo Dummett zone, which was several times higher in copper and gold grades, which was a completely new type of discovery. So I think you want to see the companies not just wait for these, somebody to come along and buy. The biggest problem to watch out for is the location. Are you going to have social license problems? If you're in Latin America, you need to be very careful that this isn't near some place where the local thugs are going to get in there and pretend that they're fighting for the people and start shaking down the company, blocking this and blocking that. And there's also environmental sensitivities. Is it in an area where if you develop it, you'll have all the NGOs swarming in on you and saying, no, you're going to destroy the downstream fishery or the watershed and things like that. These people obstructions, those are what the big guys are going to be very wary of. And if the junior you're placing your bet on isn't just handicapped by a low grade that a higher gold price will make better, if it's also handicapped by these factors, it may go up a bit, but it'll end up just sort of stranded halfway out the bay rather than going all the way out to sea the way we want these juniors to do in this emerging bull cycle.
With baggage and issues, you mentioned salmon. There is Northern Dynasty Minerals up there in Alaska, a very controversial project. And in about a week ago, they announced that they confirmed they received the final environmental impact statement for the Pebble project. What was your reaction to this?
I think they have done a good job stress testing this. If you have some earthquake of the kind caused by an asteroid hitting the planet Earth, we have much bigger problems than a tailing dam collapsing because of an impact that big that triggers such a monster earthquake. I think this thing was driven more by wealthy people living in the area who made it their mission to oppose this project. There was an article in the New York Times which had a very unfair title. This is really a copper mine with a significant gold credit, but they packaged it as a frivolous gold mine. Technically, we don't need more gold. In fact, everybody who's a gold bug would be a lot happier if mining were shut down and banned so that there was not more gold brought into existence every year. So I'm glad that they approved that. It's not like decades ago when mining companies had no rules to go by, no big permitting systems to make sure everything is engineered properly. So I was quite pleased to see that this was finally being pushed forward, and it did go through the proper cycle. The obstacle before was they didn't even let it go through the approval cycle, which I thought was completely unfair.
When you look back on 2020 so far, we're in August, what would you categorize or describe as your biggest investing mistake this year?
Well, it's been hard to make mistakes this year unless you consider omissions to buy shares that you could have bought and that were staring you in your face. But I would say the mistake I've made is I had a position in a company called Zinc Mining, which I had supported for a long time. Its chairman and CEO were CEOs of two companies. One bought out for $800 million, the other bought out for $4 billion. So I assumed that they were reasonably competent, and yet several years ago they raised a bunch of money, quietly spent it, and then shifted the rest of the money from the West Desert Project to another one in British Columbia, which was acquired from the chairman. So it's kind of a self-dealing thing. And the stock sank to about 2-3 cents. And I should have, at the beginning of the year, just dumped my position, crystallized the tax loss, and shifted it into some other 3 to 5 cent stock run by technical people who were beat up by this market, but are now finally coming to life like some sort of desiccated frog that's been sitting in the bottom of a dried out lake for a decade and all of a sudden is coming to life. In the case of Zinc, it seems like nothing is coming to life, and I should have sold that and redeployed into something with a lot more life to it.
On a positive note, can you share with us one of your biggest recent winners in the last year?
The stock that's done the best is Galway Metals, which has the Clarence Stream project in New Brunswick. I picked it up as a favorite in earlier this year at about 34 cents. And it's recently hit $1.93. They have raised money. They took a lot of dilution, but they have now $20 million in the treasury. They've got 5 rigs going. And they're benefiting both from discovery exploration, because they're taking this thing where they already had ounces. They've gone beyond the original targets. They're looking at it as a district scale. So this is the type of stock which is firing on both cylinders. Whatever ounces they've already accumulated are going up in value as the gold price rises. But their exploration strategy is all about building new ounces, turning this into a multi-million ounce camp. So that thing's up almost 500% in a period of about 4 months. So that's my best winner so far this year.
Yeah, congratulations on that win. You're known for investing in these smaller microcap juniors. You mentioned Midas, which is a advanced stage developer. Do you invest in the producers right now?
That's an area where I don't have any real expertise. I've created an index that has about 52 producers that have at least 100,000 ounces of gold production per year. And that group is up about only 50% right now. When you get into these companies, there's very detailed analysis that you have to do, and there's plenty of people better trained than I. So I tend not to pay any attention to producers.
What type of feedback are you getting from your subscribers? Like what type of questions or any anecdotal stories you can share?
Well, you started off calling this the Kaiser Bottom Fishing Report, and we're called Kaiser Research Online. But my historical expertise has been bottom fishing, and that's been a bit of a drag in the past decade, where everything just seemed to want to stay on the bottom and go nowhere. So the subscribers that I have now, they're looking for me to highlight these juniors that are sitting there that haven't really woken up, and it's quite fun. I run a Slack workspace that's for subscribers only, where we have different channels for bottom fish favorites, rare earths, precious metals. And so we're kind of engaged in an interactive activity. Most of the subscribers just lurk and listen, but there's some who are active, and it's become kind of fun as we use my search engine to rummage around and find these stocks that haven't really woken up or have moved from being below 10 cents into the 10 to 19 cents range. I mean, at the start of the year, we had 53% of all TSX Venture listings trading below a dime. That's dropped to 30% as these companies are waking up. So it's a fun period right now. I think this will last until the rest of this year. Next year, it'll become a lot tougher. Everything will be much more higher valued, and you'll definitely need to have those companies which are able to keep delivering fresh news, making their projects better. I don't think gold's going to go up forever. I think it'll be probably bounce around in the $2,000 to $2,500 range. And so that's when the market attention will turn back to the companies. What are you doing to make yourself better? Don't just wait for gold to go to 5,000 like some think. What are you doing? And that's the fun part. That's my specialty, is to figure out the stories. What are they doing that's different from what they have done in the past? And is there a reason to believe that what they're about to do in terms of exploration could change the fundamentals of the company significantly? And that's back to your earlier question. Do I still think this is a discovery-driven market? The 2003 to 2011 period, it wasn't really discovery-driven. There were a few like Fruta del Norte and Eleanor that were new discoveries, but most of it was feasibility demonstration. In this market, there aren't that many deposits on which feasibility can be demonstrated. It's more about showing new discoveries. And you mentioned Osino as a sponsor of this particular show. Osino is one of my favorites. It's doubled since the start of the year, and they are doing brand new stuff in Namibia. It's all grassroots. Hayadon has got a great team, and they're not going to find billion-dollar deposits. What they're going to find are multiple $200 million, $300 million value deposits in that particular setting, and it's the ability to repeat this. They've got a method for doing this, and that's what fascinates me. They have a value creation method. It isn't just we've got this one fantastic project. The case of Zephyr Minerals, which I mentioned earlier, they have this one El Plomo section, and there's either a multi-billion-dollar Broken Hill type Cannington clone there, or there's nothing there. You can't go elsewhere in there. Companies like Osino, they've got a whole strategy in a land position where they can find deposits that have never been found for before in this region, nor has any kind of exploration being done targeting this. So that's kind of a great example of a junior where you're going to see wealth creation through exploration, at the same time benefiting from a rising gold price, because these deposits in this region are not super high grade. So in a range without any visible inflation, raising the capex and the opex, that's a winning combination.
Yes, definitely agree. And I didn't ask John for those affirming words about Osino, and I agree wholeheartedly. And it's run by a great management team, and that's why they are a show sponsor. To learn more about John's service, Kaiser Research Online, I'm going to put a link in the show notes, and the website is cashflow.com. John, thanks for coming on today's show and sharing your insights.